Good morning, David Coombe here. Thursday the 17th of November, and we're now well and truly into past the close of the US markets here, and down about 1.58% or 190 points in the case of the Dow. FTSE down 0.15%, and oil up pretty strongly here. That's not really encouraging because the more money that's going into price of crude is less money for economies, for other parts of the economy. Gold came off here, 1750 down to 1764, really finding that 1800 level very, very challenging to break through, it seems. So one of the reasons for this sell-off in the States at least was that ratings agency Fitch came out saying they had, well, US banks had manageable exposure to Europe, but the further contagion posed significant risks. So a bit of a good double speak there on behalf of the rating agency there. Bit of a foot in each camp, a bet each way. So yes, they're really saying that they are somewhat exposed if the debt situation in Europe worsens. So well, I guess probably that shouldn't come as any great surprise to anyone. Okay, let's just have a look at what the futures are suggesting here. Go and have a look at where we're at. I think last time I looked we were pointing down about 40 points, but looks like that may have actually picked up here a little bit. Okay, yep, it has. So we're only pointing down 17 at the moment to 4,251. So it looks like we'll have a down day, and once again that 4350, 4400 level is the top side of the trading range at the moment. If you sell there every time recently, you'd be making money and going short, of course. The other argument at the moment is simply to stay out of the market altogether, and that's probably not a bad one either. Anyway, moving on, Hang Seng down 409 and the Nikkei 225 pointing up 30. Have a close look at some of the commodities now. West Texas, as mentioned, up a good solid nearly $2.50 there. Well above $100. Brent at 110. That spread is starting to come in there. In terms of the rest of the commodity space, wow, it's pretty much red all across the board there, apart from lumber. The big movers were coffee down 1.5%, wheat down 1.54%, sugar 1.17%, soy 1.04%, oats 1.07%, rough rice 1.77%, wool 1.14%, and they were the big movers there. Copper, slight move, 2.65 cents to the downside. Gold, as mentioned, 1763.80, and silver at 33.73. Currency pairs now. Euro buying slightly less US dollars, 1.3466. The pound similarly buying 1.5733. The US buying 77.0450 yen. The Aussie nearly off a cent here, and very close to being back to parity, 1.0081. Don't seem to hear too many people talking about a parity party. I wonder why. US dollar buying 1.0234 and the US dollar buying 0.9187 Swiss francs. Economic calendar now. We have our CPI numbers out in line with expectations. 2.1 year-on-year October, not quite as much as expected there, 3.5 versus 3.7. So nothing really to drive things particularly there. We've got average weekly wages numbers coming out of the Bureau of Statistics here, 11:30. Machine tool orders out of Japan, and retail sales out of the UK, and that takes us through to Friday, and that's pretty much This is the data Thursday. We do have some CPI numbers out of Canada, and we've got leading indicators out of the US early Saturday morning. Have a look now at the Falcon Trader. First, a quick look here at the index. Yesterday we closed down 42.45, so really building up quite a pennant here to my eye, so that tends to suggest we get a break out one side or the other. That inner downward trend line here would suggest that we could be looking at retesting 3,900. Possibly down around here, but the immediate term resistance is down around, support rather, is down around the 4,100 level. The only trade that I am still in is Harvey Norman. Just trying to find that here. Holding up, it did get back up near my entry level there, about 224, after it paid that quite reasonable dividend. But since then, it seems to be doing a little bit of consolidation. But yeah, reasonably comfortable with that trade in the current market. A couple of the gold stocks here that seem to be making pretty useful sort of lows and now starting to round off. That's starting to look like a little bit of a reversal pattern here on Kingsgate. They have got a takeover in play, so people tend to get a little bit concerned about those things happening, and of course the possibility that they're overpaying for the assets. So that seems to be keeping Kingsgate under pressure, but a little bit of patience there I would have thought would be reasonably well rewarded. St Barbara is another one that I tend to favour, and that's broken out above this $2.40 odd level and seems to be moving up quite nicely here. And then we have Medusa here somewhere. There it is. A similar picture here, down to levels that whenever it's tested those levels in the past, they tend to have been fairly fleeting and reasonably profitable if you jump in there and look to ride things up for a good dollar or so. And of course, you know where you're wrong. Stop losses are going to be down around the mid, or the low sixes. And just having a look at what else can we look at here that might be relevant. I'll have a quick look at cotton here just to finish up. Okay, that's continuing to pretty much flatline here. We have been sort of calling that long, and I know that Jonathan in the Barrett's Bulletin has been keeping an eye on that and suggesting that it's pretty low risk to the downside, but it's not doing as much good to the upside at the moment. So we just have to keep our eye on that one. Okay, well, going to leave it there. Thanks for your attention. Till next time, bye for now.